Hey, welcome to Talk Tickers, your go-to for breaking down the earnings calls that are really moving the market. Today, we're digging into Embraer's Q3 2025 report. And wow, what a quarter. We're talking record numbers, a super confident outlook, and a reaction from Wall Street that, well, it's going to make you scratch your head.
So let's get right to it. This is the big question, the puzzle of the quarter. Embraer basically comes out with this stellar report card, right? But the market's first move, to sell? It makes no sense on the surface. We're going to dig in and figure out exactly what was going on there, and more importantly, what it means if you're watching this stock. Okay, so here's our flight plan for this breakdown. First, we'll hit the big headline numbers. Then, we're going to get into the real drama, this tug-of-war between a giant backlog and some serious margin pressure. From there, we'll listen to what management had to say, and then we'll wrap it all up with our take, the analyst's next call on where this stock is headed.
All right, let's kick things off with the headline numbers. And I got to tell you, on the surface, these things looked absolutely fantastic.
So check this out. Adjusted earnings per share hit 64 cents. Now that wasn't just a beat, it was a blowout. We're talking nearly 40% higher than what analysts were expecting. I mean, that's a home run on the bottom line. No two ways about it.
And then you've got revenue. Get this, over $2 billion. That's an all-time record for a third quarter, and it's up a whopping 18% from last year. So right off the bat, you know demand is not the problem here. Not at all.
And if that wasn't enough, just look at their firm order backlog, $31.3 billion. Another company record, up 38% year over year. That basically means they know what they're going to be building and selling for years to come. So you're looking at all this great news, right? A trifecta of wins. So what gives?
Yeah, this happened. The day they announce all this amazing news, the stock drops over 4%. A record quarter, and investors are selling. It's a total disconnect, and that's what we need to get to the bottom of.
And that brings us right to the heart of the matter. You see, the market was basically stuck in this massive tug-of-war between two really powerful and totally opposite narratives.
Okay, so on one side, you've got the bull case. And it's pretty obvious, right? That record-breaking backlog, tons of free cash flow coming in, and more planes being delivered. But then there's the bear case, and this is what spooked the market. It's all about profitability. The company's EBIT margin, which is just a fancy way of saying how much profit they're making from their actual operations, got squeezed down to 8.6%. And why? Well, a couple of things. They got hit with a $17 million headwind from U.S. tariffs, and the mix of planes they sold just wasn't as profitable this quarter. So the market saw all this incredible growth, but it got really nervous about how much it was costing them to get it.
So that sets the stage perfectly for what management had to say. How did they handle these concerns? What did they tell us about the future? Let's take a look.
Now listen to this, because this might have been the single most important thing said on the entire call. The CEO, Francisco Gomez Netto, basically came out and said that for 2025, supply chain risk is, and I quote, over. Let that sink in. For a company like this, that is a huge deal. It means the story is shifting from can we get the parts to how fast and efficiently can we build these planes. It's a total game changer.
And it wasn't just talk. To back up that confidence, they went and reaffirmed their full-year guidance on everything. Revenue, margins, cash flow, deliveries, all of it. They didn't flinch. Even with those tariff and product mix issues, they're saying, nope, we're still on track. That's a really strong signal that they feel good about hitting their numbers, especially heading into the all-important Q4.
You know, there's another piece of good news here, and it's about their financial health. Their balance sheet is getting stronger. S&P just upgraded their credit rating to investment grade, which is a big stamp of approval. The other big agencies are looking positive too. So what does that mean in plain English? It just got cheaper for Embraer to borrow money. That gives them a ton more flexibility to keep investing in the business. Basically, the company is getting stronger financially, right as its business is taking off.
Okay, so let's put all the pieces together. We have the record numbers, the margin worries, and management's confident outlook. Where does that leave us with Embraer? What should you be watching for next?
All right, here's what you need to keep your eye on. First up, Q4 deliveries. With the CEO saying the supply chain is fixed, this is now a pure test of their ability to execute. Can they deliver? Second, watch those U.S. tariffs. Any good news there flows straight to their bottom line. Of course, we'll keep an eye on new orders. We want to see that backlog keep growing. And finally, the big one. We need details on their 2026 outlook. That's what's going to tell us the real story about where their profit margins are headed.
So, you see what's happening? The whole story around Embraer is changing.
We're moving past the "are they going to recover from the pandemic" narrative. That's old news. The new story is all about execution. Can they turn that mountain of orders into actual planes, profitable cash flow? And can they start selling a richer mix of jets? That's the game now.
Which brings us to our final take, our rating, outperform. Look, we think the market's initial reaction was a classic knee-jerk move. It got way too hung up on this quarter's margin pressure. We see that as incredibly short-sighted. That colossal, record-setting backlog, that's a bridge. It's a multi-year bridge that gets them to much healthier profit margins down the road. The long-term story here is just too strong to be derailed by these temporary bumps.
So here's the bottom line, the thesis moving forward. Right now, the market is pricing in all of the short-term pain on margins. The opportunity, as we see it, is that the market is seriously underestimating Embraer's ability to just execute now that the supply chain headaches are gone. As they start proving it quarter after quarter, and as that product mix gets better, we think you're going to see a major re-rating of this stock. The market is going to have to wake up and catch up to this new scaled execution story. And remember, this is not financial advice.